All right, guys. Today we're here. We're going to talk about the new SBA rule changes, right? Obviously, I'm Matthew Meehan from Shield Advisor Group alongside my partner, Luigi, the professor, Rosabianca. And today joining us, we have Jeff Villwock, a mergers and acquisition specialist. And he's also an investor who's used several SBA loans to actually acquire businesses. So, gents, tell me what's going on. What do you think about these new changes that are coming up?
Good morning. I wish I could change the changes. I mean, these changes are, going to cause problems for guys like me to go out and, and actively look for acquisitions. Some of the rules, frankly, make zero sense. I guess I understand that the SBA needed to, or felt they needed to, make some big changes after their default rate, jumped in the first quarter. So I get that. But some of these changes, Matt, just, whoever made them has never bought a business. Let me put it that way.
Yeah, absolutely. For mergers and acquisitions, people out there actively looking for businesses, it's going to sting a little bit because, banks are going to require you to put money down. Even some banks still required you to put money down. The rules have definitely gotten tighter.
No doubt about that. And it's not just putting money down. I mean, you can always get an investor, to handle that for you if you need to. The biggest change to me is the change that if you want a seller to continue to be in the business post closing, the old rules were if the seller didn't own 20% or own less than 20% of the business, that was fine. Not an issue. The new rules say that if he owns any percentage, 1%, 20%, whatever, then the seller needs to guarantee the loan along with the person who owns the 80, 90, 99% for a period of 2 years. And Matt, yeah, I mean, Lou, you work with SBA all day long. I mean, are sellers going to do that? I don't think so.
When you have an arm's length transaction with a incoming purchaser that you don't know and are not familiar with, that's it's a non-starter. So it's dependent upon advisors like us and investors like you to get a little bit creative. But let's just pull back a little bit for context, so everybody that's listening has the proper context of what we're talking about. So let's go back 2 years, right? Even though the changes that the SBA changed were effective January of 24, prior to that, these SBA loans, Matt, I know he's going to kill me because he's heard me say this analogy all the time. These SBA loans were the Rolls Royce at the car dealership. Right? It was the vehicle for the elite business owner, high revenue, high credit. And what the changes, round one of changes, sought to do is they made this Rolls Royce a Cadillac. Nice wheel, but accessible to many. Okay. Yep. Now, when you make a democratic move such as that, and you're kind of going to that lowest common denominator, you have certain hiccups. And those hiccups were increased defaults, increased late payments. So it creates a little bit of stress. So during Q4 and Q1, the SBA had a record amount of defaults. So what happens with, and Jeff said it best, what happens with non-entrepreneurial governmental legislators? They swing the pendulum and it snaps back. So they said, okay, what we did last year during the Biden administration was foolhardy. We lightened the guidelines too much, and now we got really, really strict. But it's strict across the board. So, for example, we'll even start with foreign nationals.
Yep.
Like now the SBA is limited to only citizens and resident aliens. And it's not just citizens and resident aliens. It's we need to establish that we are citizens and non-conditional resident aliens. Otherwise, you can't be.
Well, you know what, guys? Why don't we do this? Why don't we take
for passports?
Yeah.
Are you hearing that?
Yeah, guys, why don't we do this? Why don't we take a step back for a second and go down the rule changes one by one? I think that'll help everybody. But let's establish exactly what an SBA loan is, because there's still a lot of people that aren't clear on that, right? All an SBA loan is the government insuring the institution, usually a bank, right, up to 85 to 90% of the loan that they give you. What does that mean? What that really means is if I'm going to lend you $1 million, I know I'm going to hit that SBA guideline. Then I'm going to have my own guidelines that I'm going to put intact to ensure if you default on that $1 million, the government's giving me back $850,000, right? So I only have $150,000 loss potentially on the books. This is why all banks always want to use SBA loans. As Luigi said, SBA loans were the Rolls Royce out there, right? They were for the banks too. But the thing is this. You weren't supposed to get an SBA loan when they first came out, what they were intended for, unless you couldn't get a loan anywhere else. So the pendulum's actually swung to the other side, right? So where we're sitting right now is everybody wants an SBA loan. All banks want to do SBA loans. So essentially, they're really the only loans that you can get out there right now because the banks have forced that situation. But let's really look at what's changed or what's going to change come June 1st. The first thing is, the SBA and banks are going to want you to put skin in the game, okay? They want to see 10%. Where with the old rules that we just came out of in the old regime, you may or may not have had to put down some money, right? It's kind of like, think of it like buying a car, right? You put some money down before you get the keys to drive off, because if something happens, the bank can come back and get the car. That's totally understandable. Now, to the point that you were talking about, Jeff, where seller financing still counts, but there's strings attached with it. Okay. You can use a seller note. You can pay the seller over time. But here's one key thing. Right now, if you're using a seller note that recently changed, besides just holding a little bit of equity in the company, you have to be on full standby for the whole term of the loan. So let's think about this. Not just what you were talking about before, but a term of an SBA 7A loan is 10 years. So the seller would need to be on the loan with the note for 10 years. They might as well just stay in the business at that point, right? Does it make any sense to sell?
No, I can't do that because then they have to guarantee the loan. But exactly.
And also,
you've gone from a 2-year forbearance to life of the loan.
The thing is, the seller note cannot be more than 50% of the down payment for the business, right? So the seller note, more than 50% of the 10% down payment, excuse me. So essentially, the seller note is not really that much anymore, And more importantly, it needs to be in writing with the SBA overall, Good news is, there's some good news that came out of this, though. If you're a very high net worth individual, there's no more discrimination against the wealth, right? So essentially, everybody out there can use SBA loans. Now, this is really where you were talking about, the partial ownership transfer. Rules just they got tighter, The old rule was you can buy part of a business however you want it, right? But now it has to be a stock purchase and can't be an asset sale, right? And sellers, like you said, who keep less than 20% or greater than 20% of the loan have to personally guarantee that, okay? So what do you guys, what are your opinions so far, right? I mean, we got one benefit and 3 negatives.
We're keeping the lawyers and the title companies busier, right? Because you cannot be casual about due diligence anymore. If you're doing a stock transfer, you've got to be meticulous and probably have some escrow triggers in place just to make certain that there are no outstanding liabilities, tax lien, warrants,
et cetera. Lou, like you were saying.
Yeah, Lou, I think that's the other big change that's not in the regs, but is just going to be the fallout. Because if you're not going to do a seller note, one of the big reasons you wanted a seller note was if post-closing, a rep or a warranty was violated, you had somewhere to easily go and get your money back. Okay, assume you're not going to do a seller note, then you're going to have to go back to using escrow accounts and withhold from the seller some percentage of the deal for a period of time, generally 12, 18 months. And that's going to be held by an attorney.
Jeff, I'm certain you remember the day years ago where you would have transactions closing with 5, 6, 7-figure escrow amounts just because you may have had a sales tax uncertainty, or maybe there was a litigation, or there was some sort of anomaly that the purchaser wanted to be protected against.
Absolutely. And and in big deals, non-SBA, much larger transactions, I mean that's a standard term. Right, you're going to have, some escrows maybe for working capital, other escrows for reps and warranties, and it's been part of the deal forever. And so now you're going to take that, which again is going to make the lawyers very happy, and drop that into a small $2 million transaction. I mean, it's a shame because look, I mean, the person that knows that business best is the seller. And so I would love to have the seller. I mean, I've done a bunch of deals at 51.49. The buyer gets 51%. The seller takes the money off the table, continues to work as they have been to grow the business because they expect their 49% to be worth ultimately a whole lot more than the 51% they're getting today. All right. Obviously, you can't do that in an SBA loan, but you can't even do, I want you to have 10% because I want your continued input into this business. As you know, I recently made a bid on a $15 million company. And this guy is the industry expert, the seller, in that business. I'd be crazy not to want to have him in there, right? But now I can't. And so, again, I understand maybe what the SBA is trying to accomplish, but I don't understand why a seller retaining a portion of the business is a bad thing for the SBA. You would think that would be a good thing for the SBA. De-risks the transaction.
So, Jeff, I think we're going to go back to where somebody's going to find a workaround, right? So the seller is going to wind up staying on, but he's going to be paid a high salary, right? Instead of equity. Or maybe he'll get some phantom stock or he'll get some profit sharing, right? We're just moving chess pieces around the table at this point to see which one sticks best, right?
Yeah. There's rules and then there's exceptions to the rules. Correct.
One thing that we were talking about before was you got to be 100% U.S. owned, right? I think that's going to be a problem for people who have foreign partners, right? You can't get an SBA loan with foreign partners anymore.
Oh, yeah.
When we talk about them going back to the basics, all this underwriting, all this flexibility started post-COVID, right? Pre-COVID, it was the same rules. Deals still got done, okay? I think what happened was the small business community and everybody woke up after COVID and said, hey, there's an SBA, right? They lowered the rules. Everybody rushed in. But not every bank was playing loose and fast. Me and Luigi can tell you. We work with tons of SBA lenders. Some are still using the rules prior to COVID, right? And then the newer ones popped up. So an influx of applications, specifically the ones that are under $500,000. They were $350 originally, actually, the small balance loans, and they raised them to $500, right? Because the SBA saw volume coming in. Well, guess what? They took that away too. It's not $500 anymore, right? Need a full entailed underwriting up to $350,000, up to $500 now from $350, right? But let's face it, a lot of the bigger banks never really changed the guidelines of their underwriting procedures, okay? Even though they were allowed to do certain things, they still didn't do it because they didn't trust what was coming, right? At the end of the day, the bank's still lending the money, okay? Not every bank is going to, abide by and do exactly what the SBA says, like some of the things that they put in there, our banks do already. Look, lenders must verify tax returns with the IRS. How many 8821 forms do we get signed on a weekly basis, right?
No, that's
must have hazard insurance. This is standard for us, right? So I don't think and then lenders.
I will tell you one of my favorite changes is the franchise directory being back, because if you were investing in a franchise, You didn't want to have that uncertainty. Will this deal get approved? Will this franchise get approved? If you're in that directory, you know that I can procure an SBA loan if I'm acquiring into one of those franchisees.
But you know what? Here's something chaotic about that. And please, one of you guys stop me if I'm wrong here, but they only update the franchise directory one time a year, right? You have till July 31st to update that directory, right? If you don't do that in 25, you're not in it for 26. So it puts restraints on somebody that's building out a franchise model, right?
Matthew, I'm sorry. Were you expecting governmental efficiency?
I mean, it is 2025. We got Musk. We got Musk in there with Doge, right?
Got Musk in there shaking things up. But at least if you're going into a franchise or want to, I mean, you know with some certainty, yes or no. Yes, I should have a path to a loan, or no, this doesn't work. I've got to find another way to finance this. So, I mean, I see that as a positive, but you're right, Matt. I mean, once a year and they miss somebody, or, I'm talking to a relatively new franchise company in healthcare. And, of course, they're not part of the list. They didn't exist, pre-COVID. And, and they're working hard to try to get on the list. Well, assuming they don't, to your point, now they've got to wait, another year, to, even attempt to apply to get on that list. And, so for them, I mean, they're out without any government help on, in funding these franchises, which is a shame.
Jeff, let me bring one change to your attention, which I'm assuming you don't see as often. On the working capital SBA loans, a business owner is no longer permitted to consolidate revenue-based loans or merchant cash advances. Now, like what Matt said earlier, coming off the pandemic, you've got merchants with 1, 2, 3, 4 positions. And the SBA was a wonderful tool to try to consolidate that. And you can no longer consolidate it. I mean, you can get a working capital loan, you can buy a piece of equipment, and you can arrange for new hires, but they don't want to see the consolidation of MCAs.
This bothers me so much.
That's interesting.
This bothers me so much because you can have a client that's paying $2,000 a day, right? Or let's call it really what it is, about $3,500 a week. Okay. $3,500, $14,000 a month for a $100,000 short-term loan, when they'll give you $100,000 for $1,800 a month. And they're saying you don't qualify because you can't pay that. The rules are antiquated. They need to change, right? If the credit requirements or they had positive payment history and they showed that they weren't in default and they paid off on these advances, why wouldn't the SBA give them money every single day, all day long, right? Raise the rate.
I think we're going back to what Jeff said earlier when we started this conversation, is a lot of legislators were never business owners or entrepreneurs. And like something that is just common sense to us, they don't have that foresight to anticipate.
Yeah, in fact, I'm a little surprised because the new head of the SBA, she and her husband are longtime business owners. Right, you would think that she would look at these and say, this makes sense, this doesn't make sense, but apparently not. And so I was surprised just from that standpoint. I was in Georgia when she ran for senator, and she's got a terrific background.
I think here's what they're doing. They're changing the rules come June. It's like they do at everything, right? What they do is they come to a really big screech on everything, and then they see how it plays out, right? There are too many defaults. We overreact.
Yep. That's exactly
stop funding, stop everything, slow it down as much as we possibly can. Then they're going to loosen up the rules, and they're going to see what works. Look, if we're on here talking about this, you better believe there's some lobbyists from banks going back and forth right now in D.C. somewhere talking about it, okay? I think we're just going to have to wait and see. And, things are going to get tougher for a little while. Fine, but they'll probably loosen up again for the better, and we don't know how long these guidelines, because they're not rules, they're SOPs and guidelines, right? How long they're gonna stay around. So it's just a matter of waiting and seeing. What we do know is there's the biggest benefit here is if you're an investor like us and you have a large cash position, the SBA is not going to make you take your cash position and go use it for the business because they got rid of the wealth rule, right? The bad news for investors like us is seller notes are delayed, right? There's mandatory equity injections, okay? And more importantly, what we do, that the rules just got really tighter for partial ownership, which really hurts the baby boomer generation that's looking to sell or maybe take some chips off the table right now. You know, they can't take a step back if they were using the SBA to have a partial buyout.
Right. It's all or nothing. Mm-hmm.
Well, Matt, I think you just said you made the $1 million statement. If they use the SBA. Now, don't get me wrong, pound for pound, the SBA is a wonderful tool. It's a monthly program, goes out 10 years, has low interest rates, it's government backed, yada, yada, yada. Okay. But it's a good tool. It's not the tool. There are other wonderful lenders out there willing to lend small businesses loans if they're bankable, willing to do acquisitions, willing to finance working capital. We just got caught up in this whirlwind during 2024 and early 25 where the guidelines got lowered and everyone just ran through that SBA door.
So Elon came out and he said he wanted to fire 48% of the people that work in the SBA, right? I believe that was the number. Okay. So we're going to restructure the SBA. However, the SBA is now supposed to take on student loans too. So not only are we going to get rid of half the workforce, but we're going to add in all these student loans, which I guarantee there's a lot more out there than SBA loans.
By a factor.
Yeah. So it's
by a big factor. Yeah, exactly.
So I mean,
I don't know how they're going to do that.
It's going to be interesting.
I mean, yeah.
So,
but, most of the loans that you would do or that I would do in an SBA world are going to be with a preferred lender anyway. So it's not like we're sending a file to Washington and saying, please bless this file. They don't do that. They make the decision at the local bank and then send up the paperwork after the deal is done. So all they're really doing at the SBA is monitoring what the banks are doing, and and that's about it. So and it will be interesting, and I agree with you, Matt. I mean, government always has a tendency to go too far in one direction, and they say, "Oops, well, in this case, we're gonna bring it back," and that probably happens here. I mean, whether you're talking tariffs or healthcare reimbursement, I mean, you go way over here, and then you do bring it back. I just hope they bring back the seller financing because, to tell a seller you can't continue to be in the business. Now, do they still have the 1-year rule on employment for a seller?
I haven't seen any updates on that. So I haven't seen any updates on that. But I mean, it was a pretty big bill, or pretty big guidelines that they came out with. Like I said, I think the most important part for us was the stricter equity injection guidelines for the purchase, the partial seller, the selling part of the business. We see a lot. But I mean, this is what makes it more important is to work with people who stay on top of these and have great banking relationships with their banks. There were some notices that went out with the SBA not too long ago, and we signed up with a new bank. And I said, how are you guys handling this? And they said, thank you for bringing this to our attention. We did not even see this. Well, guess who I'm not working with anymore? This is their business, right? Thank you for bringing it to our attention. Well, I'll get an answer. We haven't seen this yet. We haven't spoken about it. I sent the email probably 5:30 in the morning when it came out because an attorney had forwarded it to me, right? But this is why it's more important than ever to actually work with somebody who has real good relationships with PLP lenders and banks, right? And knows the ins and outs of the guidelines. Because in this type of climate, you're going to get fed a lot of bad news, right? And you might have a deal on the table. It can work, right? But at the end of the day, if you're going to somebody that tells you it can't work because they don't have either the relationships or the know-how to get it done, you're going to be doing yourself a disservice. So that's what.
Yeah, and that's why I enjoy working with you guys so much, because I see a deal, call you, say, how is there a way to get this thing done? And yeah, we got several
Jeff,
lenders we can go to.
We're sort of old fashioned here. We subscribe to that FITFO theory, right? We just figure it the fuck out.
So everybody.
Well, you guys do a great job.
Appreciate that, Jeff. So everybody here shouldn't be really stressing out too much about the guidelines. However, if you're looking to get out of a factoring agreement or refinance a merchant cash advance, get with us quickly, because we have to get you out there and we have to get you grandfathered in before everything goes into effect on June 1st. Right. So if you've been sitting on the fence, you're trying to get documents collected, you want to refi out of some of these merchant cash advances, now is the time to get it done. Right? Because after June 1st, that's going away.
Also, Jeff, would you mind sharing your details on how the audience can contact you? Because you've got some wonderful experience and strategies and tactics in structuring deals to sort of reverse engineer what lenders will allow.
Yeah, I'd be glad to. Names on the screen. Jeff Villwock. So my email address is it's very creative, by the way, Lou. It's Jeff at Jeff Villwock without the space.com.
Nice and simple.
It took me weeks to come up with that. Come on.
But Jeff, that's why I like you, and that's why you have successful deals. And it really comes down to one thing: you keep it simple. It works or it don't. You don't try to fit a square peg into a round hole.
And look, I mean, life is full of pivots. I mean, all of us in our careers and our personal lives, you're going down a path and, oops, not going to work. And you pivot. Okay, next. I've told my kids, I mean, never, ever, ever, ever give up. But you hit a brick wall, well, you better turn right or left and keep on going. And that's what we have here. I mean, this is a pivot. I mean, these deals can still get done, most of them. Okay, the terms may need to change a little bit. The seller may need to get more realistic. And I'm hoping that's going to be one of the fallouts here, is that some of these prices start coming down. Because it is, I mean, the deal market's frothy. You got a ton of people out there. I was looking at one deal last week. I called the broker on Friday. I said, how's it coming? Can you answer some questions? He said, well, before you get started, I know we only posted this on Monday, but we already have a number of offers, primarily from strategics. Today's Friday. If you want a chance, I need an indication of interest by this afternoon. Been out there less than a week.
Yeah, it's definitely a seller's market right now.
And and I think it was a great platform. So, what I spent Friday afternoon doing, writing an indication of interest. Probability of success there is probably pretty low, but it is what it is. I mean, whatever in life, you hit that brick wall, well, you got to keep on going somehow. And the same thing with the deal market. And so deals can get done, will get done, are being done.
Exactly. Well, Jeff, thanks for being here with us. We appreciate it. Everybody, that's the state of where we stand with the SBA. As we get more updates, we'll do some more of these and we'll have some more fun.